Taking a look at futures on this first day of the month of June for trading. As you can see, we're looking at possibly records again. The Dow right now is up 208. S&P is up 18 and change. NASDAQ up 78. Markets positive across all three major indices for the month of May. The tech-heavy NASDAQ up nearly 8.5%. That was led by the AI trade. Now, markets closing at record highs Friday. Also, that was carried by tech. Now, take a look at Dell. The stock up nearly 33% Friday, its best day ever. The computer maker reporting its fastest pace for revenue growth since 2018. The stock is up 234% year to date. Micron and Qualcomm also adding to recent gains. Those stocks up 5% and 3% respectively to close out last month. Let's bring in Hennion and Walsh Asset Management President and Chief Investment Officer Kevin Mahn. And Kevin, your reaction to what you're seeing with these markets, the melt up continues.
Yeah, I mean, coming into last week, Cheryl, we saw 18 record closes for the S&P 500 this year, following 41 record closes for the S&P 500 last year, which would lead many investors to ask the question, perhaps correctly so, how much longer can this rally last? But we did the research just to put this all into perspective. Going all the way back to 1946, Cheryl, there have been 12 bull markets in this country. The average duration of those bull markets is around 5.3 years. Average return, I don't know, roughly 178%. This bull market, we're about 3.5 years into it and about 118% higher. Now, I know this time could be different, but if history serves as a guide, markets could continue to move higher, particularly if the AI infrastructure spend continues, and there's no sign that that's slowing anytime soon. And of course, the situation in Iran gets resolved and oil prices start to ease.
Right now, we've got oil higher. Since you brought it up, we want to take a look at these contracts because they have spiked this morning. The U.S. conducted more defensive strikes on Iran this weekend. President Trump has yet to announce his final determination on Iran's proposed peace agreement. Exxon is warning oil inventories are going to hit dangerously low levels in the coming weeks. One executive saying that crude oil prices could jump as high as $160 a barrel as a result of that. And Maria spoke with Treasury Secretary Bassett on Sunday about all of this. He says otherwise. Watch.
President Trump and yourself obviously have been balancing this, getting rid of a potential nuclear terrorist with the idea that oil prices and gas prices have to go down before the midterms.
Well, they will. Oil prices, crude, West Texas is down about 25%. It's down about 12% this month. Gasoline prices are down, I think, about 5% now, and they will go back down. We understand that there is a disturbance here, that it's uncomfortable for people, but we're going to get to the other side of that. And I think on the other side, the oil market is going to be very well supplied. The UAE has come out of OPEC. I think we maybe got some permanent demand destruction out in Asia. So I am very confident that the energy prices are going to come down very quickly.
Kevin, your reaction to that?
Yeah, I don't think they're going to come down as quickly as we would hope, but they certainly will come down once the Strait of Hormuz is opened again. And it has a much less of an impact on the U.S. economy than it does have on the European economy and China. So they're feeling it much more than U.S. consumers are right now. But as we saw coming into this morning, oil prices have edged up about 3% just on the news that you correctly reported, Cheryl, that strikes between U.S. and Iran are ongoing. So we do need ultimately this to be resolved. Oil prices start to ease, and ultimately that will translate into gas prices coming down, but that's not going to necessarily happen overnight.
Right. Certainly, as we're going to the summer driving season, and I've been talking about the supply issues. A lot of our oil analysts are telling us that, look, supplies there is a big drawdown, whether it's gasoline stocks, oil stocks, jet fuel, et cetera, and we're seeing that actually globally. I want to get to jobs with you because Maria also spoke with the secretary about AI and jobs, but the jobs report for May is out Friday. Expectation 85,000 non-farm jobs. The unemployment rate holding at 4.3%. But there is caution about the AI-driven job disruptions. Listen to what the secretary said to Maria about AI and jobs.
We've got great collaboration from from the AI labs, the three major ones, and I am sure that this is going to be one of the great technological innovations, not only of our lifetime, but maybe since the railroads. That we are going to see innovation like we've never seen before. And look, occasionally in the national psyche, this idea of new technology. Many people are worried about it, but 20% of the jobs that people have right now didn't exist in 2000. So innovation always leads to employment growth.
Mike Lee, first to you on this one. What did you make of those comments?
Yeah, look, I think what we're it's unknown what's going to happen with AI, and I think that the rate of change is going to cause some disruption. But, you look at job openings for programmers and software engineers, and they've skyrocketed, which were supposed to be the first jobs that are going to be taken out. So, look, I think the rate of change here makes this a huge unknown. I would be worried if you're in middle management in a white-collar job that your job could become automated. Kevin, I want to ask you, because it seems like software is having a revival at the moment. ServiceNow has exploded, Palantir has bounced, Salesforce has bounced, and all the victims of the so-called SaaSpocalypse seem like they're in a rip-roaring rally right now. Are you looking at any of those names? Do you own any of those names? Do you expect this to continue?
Yeah, clearly, Mike, software was oversold, but I still contend that if you want to find the greatest growth opportunities in the AI revolution right now, you look to where the money is being spent as opposed to who's spending the money. In other words, Mike, who's receiving the bulk of these billions of dollars that are spent to build out this AI infrastructure? Software will be a growth opportunity down the road when they ultimately achieve all the return on investment that's going to come when they implement AI to transform their bottom lines. But today, you still have to look into the data centers, the cooling companies, the power providers, the memory makers, the chip producers, not necessarily the chip designers. But one name that Mike, I like on the software side is Alphabet. Clearly, what Alphabet is doing in terms of their Gemini-powered search capabilities, using AI for content moderation with YouTube, and then, of course, what they're doing with autonomous vehicles. I think they're checking all the boxes. They're seeing an ROI right now, but I think infrastructure is a better play than software.
Interesting. Kevin Mahn, thanks for being with us. Appreciate it. We'll be right back.
My pleasure.
We'll be right back, everyone.